Okay, so today I'm going to bring you through the practical view of investing and more so how I invest. This is not to say that this is what you must do, but rather this is how I choose to invest, or this is how I choose to approach investing. And the reason being is because I've taken the years to make the mistakes, I've taken the years to also learn, and I've also taken the years to refine my strategy. So now I feel that I'm in a position where I am content with the strategy that I have when it comes to investing. And that is why I do not move with the crowd. I do not care what stock is doing well. I do not care what has came in the market. I just do not care about all of that. What I focus on is what is my strategy, and then I stick to that. And I found that that works for me. So today I want to give you a practical look of me choosing the stocks that I want to invest on. If you did watch the video where I was budgeting for my bonus, you do know that I wanted to put money into my tax-free account, and I indeed did put money into my tax-free account. At first I wanted to put in, I had budgeted 20,000, but then I ended up putting 25,000 because things just played out in my favor. So I am going to be investing that 25,000 today. But before we get into investing, I want to take you through my thought process, and then we're going to go straight into investing. But firstly, before we get into it, let me introduce myself briefly. You may be wondering, who is this? If you just found me on this video, this is Jennifer Ngomala. I'm a content creator as well as a businesswoman. So I create content on personal finances, lifestyle, as well as career growth. So if any of those pillars are something that do inspire you, something that you are interested in, you enjoy the content that I put out, or you are enjoying these videos, please make sure that you join us by clicking that red subscribe button on the bottom. And also, if you do feel that my content is just not serving you and it just doesn't do it for you, please make sure that you do not force staying here and watching, so that you avoid having to leave a rude or an unkind comment, because that does not sit well with me. So let us get back into my thought process in terms of how I choose my assets. So I'm gonna firstly look at the mistakes that I made, because I did make a lot of mistakes when I started out investing. I haven't been investing for a long time. However, in the times that I have been investing, or when I started out investing, and I think I started out in getting into investing was when I got my first permanent job. 2018 is when I started investing. But the mistake that I was making when I started investing, firstly, is that I was moving with cloud. I was investing on what other people were investing on, or what was popping at the time. I did not understand why is it that I'm investing, and I was also not thinking long term. I was thinking short term. So what I would do is I would buy assets, and then I'll sell them within a year, and then you find that I would have to start afresh. My portfolio, I have to start afresh. So for me, when I started out investing, I made a lot of mistakes. I feel like it did affect me a lot when it comes to growing in my investment journey. It took me realizing that I'm just playing a losing game and having to focus on the things that were precious in my life at that time, and that was me paying off my debt. And then once I cleared that off, I came back with a bang when it comes to investing, and I've just been consistent. Each and every year I make sure that I max out my tax-free account. If I don't max it out, I come close to maxing it out. And also, I'm not tapping in and out of these investments. Like a whole year will end without me tapping into my portfolio of when it comes to my investment, because of just how I've structured my finances. I know that when it comes to my investment, this particular ones, I know that it's for long term. When it comes to my savings, I know that these ones are for when. And then I'll also have my short-term savings that I can tap into when I need money. So that has really served me well when it comes to making sure that I don't tap in and out whenever I'm investing money. And I really do want to encourage you that if you want to get into investing and you really want to see the progress, whether you have 500 rands, 100 rands, 1,000 that you want to invest each and every month, make sure that you are setting up your finances so well, so that when you are building up that portfolio of your investment, you're not tapping in and out of it. Another thing also when it comes to my thought process when it comes to my investing is that I'm currently happy with my pool of assets that I've chosen or that I'm currently invested on. I'm happy because it aligns well with my strategy. I've taken time to refine it. I took time also last year, beginning of this year, I can't remember for sure. I took time to just come back into my portfolio and comb through it, because I had so many things that I invested on, but all of it was just small money, so small monies. And what I wanted my investment portfolio to do for me was not doing for me. The reason why is because I was just investing in a lot lot of things that I also did not understand or that were not aligned to my strategy. So I went back into my portfolio. I combed it out, sold out the assets that I felt like these ones were not serving me. And then I took that money and I beefed up the ones that I felt like align with my strategy. So that is it when it comes to my thought process. Now, I also want to share this. I do not time the market. I know there are people that look at the assets and look at and wait for them to go down and then they buy. I just do not do that. I used to do that. And I feel like if you do that, most cases it's when you want to trade the assets. And I'm not in that game. When I put money into an asset, I'm not thinking of today or tomorrow. I'm thinking of the next 5 to 10 years or more than that. So I know that even if I can buy the asset now and it's high and maybe tomorrow it was going to drop, I know that it's still going to correct itself in the next few years because I'm buying assets that have proven history of growth. Sometimes the growth may not be as high in certain assets because of what it does for you, but it does. What matters to me is I can look back in the 10 years and see that this asset has been growing steadily. Even when it will go down, it still finds a way to correct itself. Like this year, we know that with the tariffs, with Trump and the tariffs, what it did to the market. And I remember that all of the earnings that I had made when it comes to the profit just went down. But then I knew that it was not the time for me to sell, or it's not the time for me to sell because my plan is not to invest for short term. I knew that was still going to find a way, that the market was still going to find a way to correct itself. And that is what it is exactly doing right now. It is correcting itself. So I don't invest looking at short term. That is why I do not time the market. I invest on long term. I do not wait for the right time to invest, but I invest when I have money. Like right now, I've deposited money and it does not help me sitting with money waiting for the market to be in the right position or for the certain stocks to drop for me to be able to invest. If you want to invest like that, you would rather have your head on the ground and just listen on what is happening. And whenever certain stocks drop and you know that you've got savings, that means that you need to always have savings that you know that you can shift into that. Then you take those savings and you buy those assets as they are dropping or as they have dropped, so that when they go out you can see the profit. There's also another process that you can follow if that's something that resonates with you. But for me, I don't time the market. I don't wait for the right time. I just buy when I have money. And also I don't do the dollar cost averaging because I don't normally have money to invest each and every month. Someone that does the dollar cost averaging is someone that each and every month or maybe once in 2 months they are putting money into their investment without having to wait for the perfect time in the market, and that averages itself out over a long time, because you might find that this month you bought when the market was low, the next month you bought when the market was high, and so that over time, as you are investing each and every month, over time it averages itself out. I don't do that. They call it dollar cost averaging, but you can say rand cost averaging. I don't do that because I don't have an allocation each and every month for investments, and that is just where I am financially. I don't have the money to put each and every month on my investment. I put money on my investment when I have the money. So if I get like a sizable amount, I'm going to put money into my investment, because my priority was still to beef up my emergency fund, to beef up my short-term savings. And then now I want us to look at my strategy when it comes to how I choose my asset. Okay, so firstly, I'm very clear about this. I want to live off my investments. So how do I want to do this? I want to do this through dividends. I want assets that pay out dividends. And I know that the assets that pay out dividends tend to not have as high of the growth rates as compared to other assets that you can find on the stock market. However, because I'm very clear when it comes to my strategy, and I don't want to have to sell any of my stocks in order for me to live off that money, I choose to rather invest on assets that pay out dividends intentionally. Like when you go to my normal portfolio for just my normal ZAR account, there also you will find majority of the companies that are there, they pay out dividends. And then when you go to my tax-free account, you'll find that some of those companies that are there, or some of the assets that are there, ETFs that are there, they pay out dividends. I'm very strategic about this because I've told myself that I want to be able to receive money randomly, passive income, without me having to lift my fingers or do anything. I want to be able to receive income from my dividends. Now, this requires me to keep beefing up my investment. I'm going to only be putting money into assets that I know or that I've seen that they pay out dividends consistently, some at a higher rate, some consistently. So I'm going to take you guys through that. And also, because this is a tax-free account, so I put this 25,000 in tax-free account, you don't have options to equities, but rather you have options in ETFs. So I know my ETFs that I'm investing on that I'm happy with, honestly happy with my selection. Maybe over time, I'm also going to come in and comp through it. But for now, I'm happy with where it sits, right? So the first one that I know that pays out dividends is Cetrix DV, ne? Cetrix DV, it pays out dividends. I love it so much. So what I love about it is that it doesn't pay out dividends once in a year. It pays out dividends every quarter. And when you get dividends from this ETF, it's not just, one dividend, but then you find that you might be paid out from different companies or something like that. You find that you are paid from different companies, but then that makes it that you get paid frequently. Ne? However, the percentage is not as high, but the frequency of it, I love it. And also I've realized that every quarter, whenever I get paid out something there, I would find that I do get close to 300 or even more than 300 in every quarter. So that for me is an indication that there is an asset that I do need to put more of my money in, because I will be able to make money. I will be able to get something off it while it still grows. Another one that does pay out my dividends is the Cetrix Nasdaq 100. It's so nice that now that I am trading and I'm invested, because I've been investing on this for a while. Now that I'm trading, I find myself enjoying the Nasdaq 100. Like, I really enjoy it. So when I look at this now, I look at my assets that I'm invested on, and then I'm realizing that, oh, you are also trading this asset. It's really, really nice. So Cetrix Nasdaq 100 does pay out dividends, not as much, but it does pay out dividends. Another one is the 10X Total World Stock Feeder. That one pays out dividends and it pays good. It pays good. Last year it paid about 10 point something. This year it paid me, it paid out about 14.7 and something worth of dividends. So I saw more money on this year. So I love that. And then another one is Sangnia, Atrix Euro Stock 50. That one also pays out dividends. However, from these four, I'm not going to put all of this money. I'm not going to put money in all of them. However, I'm going to choose the ones that stand out for me in terms of it pays out most dividends, and I'm going to put money onto that because, as I said, I'm intentional with making sure that I am able to make good money from my dividends. I just want to be those people. That's something that entices me, and I feel like it's something that encourages me to want to keep on investing. Now, someone else may look at that and say, oh no, Mina, I just don't feel like dividends. That's your strategy and it's something that works for you. This for me is something that works for me, and it aligns with what is it that I want to work on, what is it that I want to see happening. So that is why I invest with confidence, because I know that for me this aligns with my strategy, right? Okay, so now let us go into my Easy Equities portfolio. I'm not gonna show you how much money I have right now. And the reason being is because I'm also going to screenshot this. And the reason being, it's because I am going to come back and do a video of just taking you guys through how much money I've made and also how much money I have in my portfolio. But for now, we're not going to focus on how much money I have in my portfolio, but rather we are going to be doing the actual work, which is to put in the money to buy the more assets. So I'm going to be putting money into the Cetrix DV Plus. I'm going to be putting money on the Total World Trader, and also I'm going to putting money on the S&P 500. These are assets that I love. The first two, they pay out dividends. The other one, which is the S&P 500, I just feel like it would be a waste for me to invest and not put money into this, because it is just that ETFs that knows ukuthi iuba, So what I'm going to do is I've got 25,000 to invest, right? So what I'm going to do is I'm going to take 10,000, put into my Cetrix DV Plus, 10,000 Total World Trader, and then 5,000 is going to go to my S&P 500. Let's actually do that. I do have Total World 10X as my first asset, and how currently here I'm sitting at 12,000 rands. So I'm going to go and put in 10,000. So we're going to go to buy now. You're not going to get into the nitty gritties of how much the asset costs and so forth, because as I said, I focus on the fact that I just want to buy the asset. All right. So I'm going to put here 10,000. Let's see how many shares that is. That is 621 shares that I'm going to get from the 10,000. And then we're going to buy at the best available as price in the market order. As soon as the market opens, this is going to be executed. Okay, we're going to go back to invest now again. The next one that I'm going to buy on as well is the Cetrix DV Plus. Then that one currently it is sitting on a negative in terms of growth. In terms of growth, when it comes to this one does not grow as much. However, it does pay out dividends. So I look at that as a positive. I don't focus mostly on the fact that it's not growing. Whether it's growing or not, I still get paid dividends. And normally that's what happens with companies that tend to pay out dividends. They don't grow. The growth rate is not as fast. So I'm going to say buy more here as well. And it's perfect that I'm buying when it's down, because as it picks up, then I make profit. And we're going to go here, and then we're going to say 10,000. 10,000 is going to give me 3,900 shares. And then I'm going to say buy at the best available ask price, market order. And then let's do the last one. Now we're left with 4,900. Let's go and do the last one. Let's go to my text TFSA, and then we're gonna go to my S&P 500, and then we're also going to come here and we're going to say buy more. Yeah, I'm gonna put the 4,900, and then it's going to be 43 shares, and the investment cost is 15 rands. Okay, so buy when open. That is it. That is it when it comes to my investment process. Very easy, not tedious. I don't have to overthink anything. I already know what works for me. I have evidence of what is it that works for me. I do have my strategy when it comes to investing, and I do my best to stick to it and not get confused by the cloud or the news that are out there when it comes to what is the stock that is doing well, what is the stock that is not doing well. What I do is when I have money, I just put in my money in there, and then I let my money do the work while I step back. I don't want to be an active investor. I like being a passive investor, but also getting passive income from my investments. So we are different. You might find that you are the opposite. However, this for me works. Like right now, I just got in there, just decided that these are the ones that I'm going to put money in, and I put in the money there. Didn't have to go and search the stock market in terms of what else can I be investing on, because what I already have, the pool of assets that I already have, are things that are currently working for me, are things that I love, and are things that do pay out dividends, which is something that I always look out for. So the S&P 500 does not pay out dividends. I just love the asset because of its growth rate over time. So whenever I have money, I try to make sure that I'm beefing it up, because I know that 10 years from now, there is an asset that's going to be serving me a lot because of its proven track record of its growth rate in the past 10 years. So I'm going to close it off right here. I do hope that you enjoyed this video. I do hope that you saw the practical side and the thought process whenever I am investing. And the reason why I have to have all of that talk before I get into the investment part is because I want to just show you that you need to be intentional. You know, the mistake that people make whenever they're investing, whenever they want to do things, is they just go in without having to be intentional and think, what is it that you want to see happening? That way it helps you that your steps become refined and you move with intention. And for me right now, when it comes to investing, I move with intention and I love it. And I really want to encourage you that refine your strategy, know what is it that you want, and then move with intention. You find that investing for you will be easy. It won't be something that is stressful, and it's something that you are going to also enjoy. And also seeing your money work for you is something that you are going to enjoy. So I'm going to close it off right here. I'll see you guys on the next one. Please take care and stay safe. Bye. Let me finish getting ready and go to work, guys. I'm filming this video at 5:30. Yeah, but I'm late now. It is already after 6, so I need to get to work. Anyway, I'll see you on the next one. Bye.